U.S.-Iran's tension continues to rock markets across the globe. Alien Eskom's new CEO takes helm with power shake-up on agenda. And Kenya plans to refinance or exchange commercial debt with cheaper options. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi. We get the show started now with the markets, and Nigeria's stock market doesn't seem to be rattled yet by the geopolitical tension, as the index is still extending the year-end rally into the first full week of 2020. It climbed about 27,000 level at intraday, trading up by 0.94% at midday. On the other hand, its counterpart in southern hemisphere of the continent, the JSE index dropped by 1.05% at intraday. In Egypt, the EGX 30 fell 1.13% with a hangover of the previous negative sentiment. Meanwhile, its East African counterpart, the Kenyan stock market, ended Friday slightly higher by 0.84%. Meanwhile, in the Middle East, stock markets are trying to shake off the tensions that followed the killing of Iran's military leader by U.S. airstrikes over the weekend. In Abu Dhabi, the market's index was down by 0.40% at intraday trade due to 0.9% drop from Alder Properties. Dubai's index, however, rose 0.33% after Dubai Islamic Bank climbed 0.7%, while Emma Properties added 0.5%. Similarly, Qatar's index soared by 1.18%, while in Saudi's market index went up 0.03%. And European stocks traded lower in early trade as investors monitored rising tensions between the United States and Iran. Market players are fleeing riskier assets like equities in favor of safer alternatives like gold and bonds. Well, let's see how that is playing out in Europe. Let's bring in Chelsea on board. Hello, Chelsea. Happy New Year to you. Good to see you this new year.
Thank you. Happy New Year to you as well.
Right. How are European investors responding to escalating tensions between the U.S. and Iran?
This is certainly spooking investors here in Europe, as it has all across the world. The DAX, which you can see behind me, opened down about 1%. It's accelerated losses a little bit throughout the morning, so it's down about 1.5% now. Euro stocks, which is a broader indicator of European stocks, is down about 1% as well. So this is certainly, as you said, encouraging investors to flee out of equities. On the safe haven side, this definitely is encouraging investors to buy gold, which hit a 7-year high earlier in the trading session. And it's also encouraging investors to buy safe assets like German government bonds. So prices for those have risen as well. I think for investors, one of the key areas to watch is going to be oil. Oil prices have risen about 5% since Friday as this news broke. And that really could have ripple effects throughout the global economy, because a lot of countries, including Germany, are really dependent on oil imports from the Middle East. So if prices continue to rise, if these tensions continue to escalate, and there are disruptions in the global oil supply, this could definitely have a broad-based economic impact.
All right, you just like you said, oil prices have continued to rise. At what point could this hurt global economies that depend on oil imports?
I think we're not quite there yet. A lot of analysts are looking at the $90 a barrel, $100 a barrel level as a potential sort of mark for a wider economic impact. Right now, oil is trading at around $70 a barrel. It's a little bit below that now, but I think this is a really uncertain situation. We don't know how long these tensions are going to last. We don't know if Iran or other Middle East allies are going to try and take out some oil facilities, which is one of the big fears on markets, is that Iran could respond by sort of disrupting oil supply or by shutting off oil transit in the Middle East. So those are going to remain big concerns. But you know, this is already having an impact on shares throughout Europe and the world. One of the areas that's been really hard hit is airline shares, which airlines obviously use a ton of oil, and this is really having an impact on the European airline sector as well. So I think investors are going to be sort of watching what happens next, but there's already a lot of concern in the market that the oil prices are going to sort of filter through into these economies.
Well, away from geopolitical tensions and some European data out today, a new survey showed business activity in Germany and the Eurozone grew more than expected in December. Is the EU economy starting 2020 on stronger footing?
It's definitely a glimmer of hope to start off 2020. 2019 was really a mixed bag for both Germany and the European economy. So this report indicated that growth in the service sector in Germany and the Eurozone as a whole is really continues to stand pretty strong. That's really been a trend over the past few years as the manufacturing sectors across Europe have really been hit by trade tensions and things like that. The services sectors have remained really strong. So that continues, but we've also seen a moderation in the decline in many of these manufacturing sectors, including here in Germany. In December, the decline, the contraction in German manufacturing was smaller than expected. So this does point to at least slight increases in economic optimism here, but as these reports sort of drive home, we're still really looking at stagnation for both the EU and for Germany. Growth is expected to be about 1% for both of these both of these regions in 2020. So it's a good sign, but it's not necessarily a super exciting economic prospects.
All right, Chelsea, thank you for your time. We'll continue to monitor the geopolitical tension as it continues to rattle the global market. Enjoy the rest of the day.